I'm Eddie Cannell.
And I'm Tom Cannell.
Welcome, everyone. This is the Mortgage Brothers Podcast Show, and today is our August update.
August update. Nothing better than an update. So let's get going. Okay, we're going to talk about three things today. Well, we got a bunch of stuff, but the three big things are going to be where are mortgage rates today? Why are interest rates continuing to climb? Like, shouldn't they have peaked by now? And then let's make some sense as to the inflation and how it's affecting mortgage rates. So let's go.
Remember, this is for informational purposes only. This is not financial advice. If you like what we're doing, be sure to subscribe, comment, and like. Send us an email if you have any questions. You can ask us, if you have a loan scenario. Tom and I were licensed right here in Arizona. We'd be happy to help. To start here, we have the 30-year fixed. This is from the Mortgage News Daily. Shows the 30-year fixed at 7.49%.
I hope you're sitting down.
Yeah, we haven't seen it this high. Well, I'm going to show you another chart here in a moment here, but 15-year fixed at 6.89.
Okay, the FHA and the VA are typically the same. 7.12 for FHA, 7.12 for VA, 30-year.
This is the national average. These are not our rates. These are just the averages that are being shown across the country right now. Wanted to show you this chart because these interest rates, this is the 30-year fix according to Freddie Mac. This is going back, if you can see where we're at today. They update this chart once a week. So this will update actually here very soon, but today's rate is as high as it was back in March of 2002.
This is one of my favorite slides. This is something that I would literally probably put on my fridge.
Really?
Yeah.
Just because you're trying to remember where are we?
Yeah. Like, oh, it's not that bad. What was I doing in 2000? Oh, I got married. Oh, we bought.
Yeah.
Oh, you're kidding. You bought a house in 2000?
And of course, rates were higher.
Interest rates were about the same? So it's great for perspective.
So rates were higher before March 2002 than they were today. And it is, something that just to kind of keep in mind. We'll be tracking that. But why are these interest rates continuing to go up? Because we've been really believing that they can't stay up for long.
They're just about coming down.
But why aren't they?
Just about coming down. Just about coming down. Why are they not coming down yet?
So what we're seeing more than anything is strength. The economy is not slowing down.
And remember, bad news is good news for interest rates. Mm-hmm. Bad news in the market means good news for interest rates coming down. But what are we seeing?
This is the S&P 500.
Just good news.
500 biggest companies really in the world, and they are continuing. We're only 7% below the top.
Off the all-time high.
All-time highs.
What?
Were hit in 2002. But we're close to that top.
Yeah.
So things are good in the market. The stock market's good. And it doesn't mean that life is good and that, and everything's hunky-dory and financials are good and debt isn't a problem. But that's kind of the issue we're at. Like what people are showing, or these companies are showing, strength.
Right. So basically, there was inflation. It has been sticky, but it is coming down. Mm-hmm. And the market, if the market were to have been weaker, we would have seen interest rates come down. Though inflation's coming down, we still have a strong market. So those two are a little conflicting.
Yeah.
Once those two get on the same page, inflation coming down, market coming down, then we'll see those rates.
That's right. So kind of really going back to why are rates high? Because we have strength. And the Fed is going to be increasing potentially even more the Fed rate. They want to stop the growth.
Now, one thing we don't have here, because we don't have time for it, but the labor market. If you were to see a labor market chart, it would be as strong as probably the S&P.
Yeah.
It's doing really, really well.
So here's the Phoenix. Now, this is not the national. This is the Phoenix area, really Maricopa County. The average hourly rates have been continuing to climb. This chart goes all the way back to 2007. But look, we see continued strength. The hourly rate is $32.84 as the average. So continuing to go up and showing strength. Here's another chart. This is the unemployment. Why are rates high again, or why are they going up? Because we still have, things are strong.
Yeah.
Low unemployment. There's very few people out there who are not employed.
Right.
Or they're at least, there might be people who are not even searching for a job, but the reported number is only 3.2%.
And this goes back, how many years? What is this? 31 years, 32 years?
Mm-hmm.
Okay. Look at that. We are literally at like the low.
The low.
And so that's why rates are doing what they're doing.
And so it isn't until we actually start seeing unemployment going up.
Which is not good news.
Yeah, it's not good news for
But again,
jobs
because it's
and
bad
incomes,
news, it could be good news for rates.
And then we'll start seeing rates kind of come down. Okay, so isn't inflation low? I mean, we've been hearing just August 10th that the inflation is now 3.2%. It was like 9% a year ago. Now it's only 3.2. And I'm going to focus, now there's the core inflations without food and gas, but I'm just looking at total inflation with food and gas, 3.2. And just to put this into context, what is 3.2 inflation? Okay, so this is what I'm saying. According to your U.S. government, your grocery bill of $100 last year, 1 year ago, they're saying it has only increased $3.
$3.20.
So you went to Costco, well, you can't even spend $100 at Costco, but you went to Safeway and you spent $100 on food 1 year ago. Do you think that bill is only $103 now?
Right. So basically what we're trying to say is these numbers, they're really hard to understand and the data out there, but we're just reporting it.
Yeah, but I just really don't think that that's real. I think that we have seen inflation is not, we are just not getting we're not at 3.2. We sure don't feel like we're 3.2%. Things are higher, and that is why we think, these interest rates are going to continue or are going up because of strength. And strength is coming, at the
And remember,
at a cost.
the inflation target is going to be about that 2% number.
Yeah.
So it is coming down. We're still just a little bit above that.
So we're going to give 3 projections on inflation. Here's projection number 1. We were trying to figure out these graphs or how to make these graphs, what to kind of illustrate.
Yeah, I want them to be easy to read.
Yeah. So here's a mountain, right? And then we have this plain. We're the plain. Our economy is the plain, and this is where we're at today. This is projection 1. We may be at the very top of the inflation, and we may be coming down, or meaning like we've already seen the high.
Yeah.
We've already seen inflation kind of peak.
And again, the plane is the market, but it can also be inflation. It can also be the interest rate. Like those are all like buddies. They're all hanging out together.
Yeah, they're all in the plane together. You could say this is an inflation.
Yeah, right. You got some passengers. It'd be interesting to do a little passenger log.
So this is in projection 1, where projection number 1 is we could be at the very top. Or number 2 is, now this is deceiving. It looks like the plane's going to crash into the mountain.
Yeah, don't worry, it's not crashing, folks.
Yeah, but we've gone up. Now we've been coming down. We've seen inflation come down. But maybe the inflation is going to head back up again.
Yeah, just because it's just not quite done yet. Not that it's going to have a tear, but it's just not quite done yet. But don't worry, we're going to get over that peak soon.
And then we will see rates go up as well. And then finally, when things are under control and people stop spending money, corporations stop spending money and making profits, what happens is all of a sudden there's a correction and we could see things finally come back down. Okay, projection number 3. We are on our way up. We're probably close to the top, but then we're going to hit this. Projection 3 is this idea of what if we just plateau? What if we just stay at high inflation? What if we don't come down?
Right. The feds don't increase. Right. Feds don't increase the rate, and inflation does come down, but it just doesn't come down fast enough, and we just kind of sit in a stuck pattern. Yeah, and that is a possibility.
So we're kind of stuck, and it might be. That would be more of an idea of a stagflation, where you have a stagnant economy with inflation. You know what I mean? And that is kind of maybe this.
That does not sound good.
A projection number 3. Yeah, we would say probably this is the worst. We do not want to be stuck with high inflation.
Yeah, we need answers, good or bad. We need answers, and let's get them done.
Yeah, we can't have the interest rates stay up high. We have to have them get down. So anyway, these are the 3 projections for inflation. If you like what Tom and I are doing here, be sure to subscribe, comment, and like. If you have a loan scenario, home purchase, or refinance you want us to look at, be sure to reach out to us.
All right. Hey, thanks a lot, folks.
Thank you for watching the Mortgage Brothers podcast. If you have any questions, email us at team@azmortgagebrothers.com. And if you like this content, be sure to like, comment, and subscribe to the Mortgage Brothers team.